Hello and welcome to Simple Chart Analysis. So let's continue our daily blueprint for intraday traders here. This is second day. So if you have missed the previous one, please go and check that out so that you continuously follow what's happening in the market. So I'll be doing these videos for probably around 1 to 2 weeks maybe so that you get an idea of how we assess the markets for intraday trading. Right. So yesterday we discussed about the levels here. So if I go to lower time frame, 1 hour time frame here. This is Nifty, by the way. And we said we marked our important zones and decided how we are going to trade. I said even though it crossed 24,000, don't be too enthusiastic about buying immediately because there could be some selling as well. And we also expected it's going to be a range bound day and not a trending day like we saw in this red bar or in this green bar. So as you can see, it was a range bar. And I also explained the reason why it could be a range bar as well. So I can check that out. And now, if you go to 15 minutes, I mean, if you have any doubts like how we could have taken the trade and benefited from this analysis, you can go and check my other videos as well, where I have explained many of the price action concepts. One simple thing is you can use if you are good at price action analysis, then you can do the price action analysis and then take the trade here. For example, just to give you a brief idea about how that works, there was a very strong momentum here from here to here, so you wouldn't take a sell trade there. And then if you compare this was also very strong, and from here you can see the bulls kind of weakened and we also saw a rejection from the top. So this is how actually price action works. You have to be confident and you have to practice a lot to take trades based on the price action. If that is a bit difficult for you, you can even go for trend lines. You can even go to 5 minute time frames and see and draw a trend line, something like this, because you already know the zones and you just have to go ahead with the analysis. That's all. So if you draw the trend line like this and then took the trade with 1:2, because we also knew where the where the price can come as well. So this is how it worked. It was a range bound and we weren't expecting too much there. So let me just clear all these things now. I mean, don't worry if it's a bit difficult for you to immediately digest all these things. Over a period of time you will be able to understand these things and implement in your trading strategies as well. So that's the reason I'm doing this video, so that you can get an idea of how I plan things and then take trades based upon those analysis. So let's go to daily, and the new stuff. FOMC meeting was there, and then the new Fed chair, who is pretty much equivalent to our RBI governor in India. Uh, it was a rate decision policy, and it was in line with the expectations. It's not about the rate decision as such. It was about how he speaks, what he speaks, whether he's hawkish or dovish. Anyway, the market was kind of you know he said whatever the market was expecting, we can say. So that's the reason market didn't go wildly when that came out. So today what we can expect is and the Iran US deal, which is a big thing that is going to happen as well. So it's going to be implemented today or maybe tomorrow, I think, Friday. So it's pretty much a done deal unless some other actors in that war do something stupid there. So if we look at here, again, we draw the support and resistances. This was from the previous. It hasn't breached yet, but we have to stay slightly bullish here. Okay, and if you see here, this is the next level of resistance on the daily time frame. And for the lower zones, I would, for today, I would take this because there is a chance of price coming down as well. I will tell you why. Uh, but Nifty is looking really good. And if you go to lower time frames here, you see these are the two zones, and this zone is a make or break for the Nifty, at least for today. See, all I'm talking about is intraday. It's not about swing trade or anything. It's purely for intraday. In case the price breaks this level here, if it comes down like this, then there is a high chance that it might not go up today. It can just consolidate again, come down to this level here. So this is a possibility, I would say. May not come all the way to this level today itself, but there is a chance that it can come in 1 or 2 days, kind of a thing. So in case if it didn't go up and then starts coming down, or it goes up and then faces resistance and then starts coming down. This is the structure that you have to focus on. If this structure is broken, then there is a possibility that the going higher is very less. It holds very low probability, and there could be some sort of minor correction here, which is why intraday traders should be ready for selling if that happens. So that is about Nifty. These are the two levels. In case, okay, so in case if it goes really strong like this, as I said yesterday as well, this will then act as support, and then you can plan your trade according to that, and then look for buying opportunities. As I said, you have to wait patiently and wait for the very good trade before taking the trade. All you need is one good trade, that's all, and you do that disciplined in a disciplined way, and every day the same kind of logic without over trading or anything, and you'll be really profitable in very quickly. That's all I would say. But you have to be stay disciplined, and this is the analysis. If it goes strong, because overall it is bullish, actually it's not bearish at the moment, but there is a chance that usually what happens is when the things that are about to happens, then the market goes against it. So that's the kind of thing. So about to happen is like Iran deal and then rate decision FOMC. So that happened now. So there is a chance that the market can go against. So that's the reason. You have to be ready for both of them and let the market decide what it wants to do. If it goes up and stays strong like this, and then wait for a decent pullback and buy, look for buying opportunity. And as you can see, if it starts struggling to go up, and that is a very good chance, there is a high chance that it can break this level here. So you plan accordingly and take the trade. Let's quickly move on to Bank Nifty now. Right. Yesterday, yeah, this again here is the same thing. I said Bank Nifty was looking a bit bearish, and as you can see here, Nifty actually broke above the highs as well, and then this one actually didn't go that much high. It was a bit weak compared to Nifty. Okay, it's not in terms of percentages, it's about the ratio it moves. So usually 1 is to 2, 2.5 is what the Bank Nifty moves with respect to Nifty. So if Nifty is about, let's say, 0.2% up, so Bank Nifty should be around 0.5% up, that kind of a thing, 0.5% you can say. And let's look at what we can do. And this is again the same thing. This was our resistance zone. If you had gone to like lower time frames and look for price action and stuff, you could have probably uh, saw something. As I can say, if nothing at all, you can draw a trend line, especially when you have assessed the market and then marked the zones. And if it is in the zone and it's finding some resistance, breaking the trend line, these are the things that you can actually look out for. Or as I said, price action is another way. So and you can take the trades based on that. Now let's clear all this stuff here today, and let's mark fresh. Let's go to daily time frame and see if anything has changed. As you can see, this was our yesterday's resistance. I told you the reason why I took this one, because there was a gap here, and I'm taking that into consideration and marking this as a resistance. So again, it's a same thing, and for the lower side, I would mark maybe this area here. Okay, if you go to lower time frame, and this again, in this as well, the structure is pretty much similar to Nifty. In this, the minor structure, I would say minor structure is this, and major structure is this. So how you can plan is, if Bank Nifty doesn't go higher and struggles to go up, then you can look for selling opportunities right after this break here, and then look for area somewhere here as a target. So make sure you don't enter the trade if you don't have a proper 1 is to 2 risk to reward ratio. That's very important, and that's, you have to be consistent with that. If you don't find 1 is to 2 risk reward ratio, two in the sense, your target should, suppose you are selling, and your target should be well before the next level of support. If you're buying, the target should be well before the next level of resistance. That's it, basically, very simple. So if you are selling here, make sure you get 1 is to 2, and then before it hits this area here, and you go for it. That's it. And in case if it's really strong and bullish, it should show that strength. Okay, and then while retracing, it should have a very weak retracement. Only then you say, okay, it's bullish, and then you plan for buying opportunity. I hope this clears up. You just have to practice. If you don't understand clearly, you just wait and see how the market reacts, and then try to sync it with what I have said, and you'll be able to do the analysis better for yourself as well. Okay, I hope you're enjoying this video, guys, and have a great day. Thank you. Bye.